Look, if you tune into mainstream financial media these days, it feels like the real estate conversation is stuck on an endless loop, right? It's always suburban housing starts, or mortgage rate fluctuations in major cities, or commercial office vacancies. But what if you aren't looking for a suburban cul-de-sac? What if you're one of the millions of Americans looking for an off-grid homestead, a weekend retreat, or honestly just some tangible acreage to call your own? Well, welcome to today's Explainer. We're diving into the 2026 land market outlook based on data from Land Limited. We're going to look at exactly where rural property values are heading, and spoiler alert, the rural land market operates on a completely different economic reality than the urban one.
Okay, here's our roadmap for today. We'll start with mainstream myths versus rural reality, then move into speculation to intentional utility. After that, we'll cover regional divergence in values, the rise of owner financing, and wrap up with strategies for 2026 buyers.
Let's jump right into it. Mainstream myths versus rural reality. We're talking about a market operating on entirely different economic fundamentals.
So here is the absolute most crucial point. Urban housing metrics matter very little in the rural land market. When you hear the news talking about how national mortgage rates are stalling city home sales, you just can't map that one-to-one onto raw land. I mean, buyers in this space aren't looking for a turnkey three-bedroom house near a subway line. They're looking for acreage. They want tangible assets. Honestly, trying to evaluate rural land using suburban metrics is basically like trying to measure temperature with a ruler. It just doesn't work. Next up, speculation to intentional utility. This is all about the maturation of the rural land buyer. Remember the absolute craziness back in 2020 and 2021? The rural land market experienced this historic, hyper-accelerated rush. Remote work exploded, urban fatigue set in, and speculative buyers were basically scooping up anything they could find. They just wanted quote-unquote cheap dirt, totally ignoring things like infrastructure, zoning, or long-term usability. But fast forward to 2026, and that speculative froth has completely burned off. Today's buyer is incredibly intentional. They demand functional utility. That means properties absolutely must offer clear legal access, sensible zoning, and either reasonable proximity to the grid or highly viable off-grid potential. Things like proven solar and water access. That kind of sensibility is what's commanding steady, resilient pricing today. So with those speculative buyers gone, who's actually left? Well, the market has stabilized around a really solid core base of buyers. We're seeing homesteaders who are actively seeking self-reliance. We're seeing generational legacy investors who view land as a long-term tangible asset to pass down. And we're seeing lifestyle buyers who actually intend to roll up their sleeves and improve their properties. And this is a massive deal for you, because a market driven by utility and real improvement is just inherently so much more stable than one driven by overnight speculation. All right, moving on to regional divergence in values. And honestly, this is exactly why national land averages are completely useless. Think about it. A quarter-acre lot in suburban Texas has literally nothing in common with remote Alaskan acreage. Nothing. In 2026, we are seeing some incredibly distinct regional trends holding strong. Take the Mountain West and Southwest, specifically places like Colorado, New Mexico, and Arizona. Buyers there are paying a premium for recreational base camps with those gorgeous scenic mountain vistas, which also double as a great long-term inflation hedge. Then, if you look at the Pacific Northwest and Northern California, counties with dense timber and water access, like Modoc County and the surrounding areas, those remain perennial favorites. They give buyers who are priced out of traditional housing a really accessible entry point. And then there's the last frontier. Up in Alaska, demand is heavily driven by self-reliance enthusiasts looking for true wilderness isolation and, of course, legendary hunting and fishing. Alaskan acreage is just a totally unique asset class all on its own. Actually, speaking of Alaska, get a load of this data point from the source material. 0. That is the actual property tax rate in many remote Alaskan boroughs. Literally 0. When you combine that kind of true geographical independence with 0 property taxes, it is incredibly easy to see why values have remained so remarkably firm up there. Let's shift gears to the rise of owner financing, which is all about bypassing the friction of traditional lending. To fully grasp the solution here, we first have to understand the core problem. One of the biggest undercurrents shaping the market in 2026 is that conventional banks have largely pulled back from financing raw, vacant land. This is especially true if you're looking at smaller parcels or anything lacking fully developed municipal utilities. Now, this credit tightening could have completely frozen the market, but instead, it actually accelerated a massive shift. That constraint led to a really powerful solution: direct owner financing. Because buyers can't just go get a traditional mortgage for raw land anymore, this transparent seller financing model has become the main engine moving inventory. By offering low down payments, skipping the credit checks, and ditching prepayment penalties, sellers are totally removing the bureaucratic hurdles of institutional lending. The big takeaway for us here is that this model creates massive liquidity. It keeps rural land accessible to everyday buyers, not just massive cash-heavy institutional syndicates. Let's bring it all together with strategies for 2026 buyers. Here are the actionable realities you need for the modern land market. The macroeconomic indicators are pointing to 3 absolutely crucial steps you need to understand right now. Step 1, secure an inflation hedge. If your goal is to preserve capital over a 5 to 10-year horizon, hard, tangible assets are continuing to beat out volatile paper assets for sure. Step 2, balance patience with speed. The frantic, crazy bidding wars of 2021 are over, which means you can afford to be patient. But, and this is a big but, prime parcels, especially the ones with verified legal access and clean titles, they still move incredibly fast. So when you find quality, you gotta jump on it. Step 3, maximize flexibility. Since interest rates are making long-term debt so expensive right now, flexibility is king. Use those direct financing models we just talked about. Secure your land on manageable monthly terms, but keep the freedom to accelerate your payments and pay off the balance early without any penalties. There's a quote from the source material that just perfectly hits the nail on the head regarding everything we've talked about today. It says, "The 2026 land market isn't about wild, unsustainable spikes anymore. It is about a structural realignment towards self-reliance, tangible assets, and geographical independence. Whether you're looking to plant roots in the Rockies, build an off-grid homestead out in the desert, or claim a remote slice of Alaskan wilderness, rural land is still one of the very few real estate sectors where affordability, actual utility, and personal freedom intersect." We've covered how the market has matured, which regions are holding strong, and the financing tools keeping the dream of land ownership alive for everyday buyers. So, the only question left for you is, where do you plant your roots? Take these strategies, go find your perfect piece of geographical independence, and I'll catch you in the next explainer.